Hello, everybody. Mike Nelson with EfficientLending.net. First and foremost, thanks so much for taking time to check out my content either online or on my blog, YouTube channel. I always appreciate it when people take time to check out my content on the web. All right, the topic for today is mortgage insurance. And look, this is a great topic for right now. I'll give you some context. I am getting a lot of inquiries from buyers about purchasing homes and different loan-to-value ratios. And as most people know, 80% loan-to-value ratio and above requires mortgage insurance. And so it's an important topic. And one of the things that I'm coming to understand is there's two big important factors in mortgage insurance. Number one, not all mortgage insurance is the same. Mortgage insurance can be very different by credit score and by loan product that you're using. And number two, there's a huge opportunity in the market if you're a buyer working with agents to use the differences in mortgage insurance to get the best value in the property you buy. And also that's for the buyers, but the real estate agents, look, you've got to understand what's going on with mortgage insurance so that you can present these ideas to your buyers, to our buyers, and then they can make the best purchasing decision. All right, so let's jump into the topic and let's see if I can't delineate some of the differences between mortgage insurance and why it matters. So first off, let's just keep it easy and start with the definition. What is mortgage insurance? Mortgage insurance is, in essence, an insurance policy that can be purchased most always by the buyer. And what it does is it creates a hedge or a safety for the lender so that they can offer higher loan-to-value ratios. So for example, in an FHA loan, you can get a FHA loan with mortgage insurance at low as 3.5% down. Same with a conventional loan. So it keeps interest rates low. And also it increases the amount of money in the marketplace that buyers can use to purchase homes. So it's an important part of the mortgage transaction. And look, let me just get my personal bias out here. I don't like mortgage insurance. I've had mortgages in my previous homes that I purchased that had mortgage insurance on it. And so my bias is I don't like it. It's a part of a expense in a loan that is not necessarily going to principal and interest. And I like to keep the loans as low as cost as possible. But just to say that mortgage insurance is not a good thing and it's expensive, that's just not really looking at some of the benefits that mortgage insurance has as well. All right, so moving on. Look, I hear constant terms of mortgage insurance. You'll be heard it called MI. You'll be heard it called MIP. You'll hear it referred to as PMI. And let's face it, it's just confusing. What is it? And what are the differences? So let's see if we can't clear up that really easily here. So MIP stands for Mortgage Insurance Premium. MIP is associated with an FHA loan. PMI stands for Private Mortgage Insurance, and that is associated with a Fannie or a Freddie loan. A Fannie and a Freddie loan are by government-sponsored entities, so they're, quote, not a government loan. They're conforming Fannie and Freddie loans, whereas an FHA loan is, quote, a government loan, and it has MIP. These two products, MIP and PMI, very different. And that's where it comes in that not all mortgage insurance is the same. So let's see if we can't clarify this. So let's talk about MIP, Mortgage Insurance Premium. When you get an FHA loan, you are going to pay a 1.75% of the loan amount is an upfront funding fee. And almost always this upfront funding fee gets financed into the loan balance, okay? And then I'm generalizing here, but most of the time you're going to pay 0.85% of the loan amount as mortgage insurance, and that's divided over 12 monthly payments. Now there are two really important characteristics of MIP FHA loan. Number one is the MIP, the mortgage insurance premium, is the same for all FICO scores, from low FICOs, 600s, all the way up to the highest FICO scores, and the upfront funding fee is the same for MIP FHA loan, 1.75%, regardless of FICO score. Also, and this is the big one, mortgage insurance premium will last for the lifetime of the loan. The only way you can get rid of it is by refinancing the loan, selling the house, something of that nature. That's MIP. Let's talk about PMI. Okay, PMI is done a little differently. Anything at above 80% loan to value requires a PMI, private mortgage insurance. Now, it is not the same across all FICO scores. So the highest FICO scores have the lowest premiums. The lowest FICO scores have the highest premiums. There are scenarios, and they can be common, in which the actual mortgage insurance premium, the MIP, is less than the private mortgage insurance of the conventional Freddie Fannie loan. Your loan officer has to do the research here. Okay, the other thing, and this is important, at 78% on a conventional Fannie Freddie loan, you can apply to have your house appraised, and if the loan to value, meaning the principal balance left on the loan, is less than 80%, of the 80% or less of the value of the home, your mortgage insurance comes off. So you don't have to refi, you don't have to sell, refi, do anything to loan. That mortgage insurance is going to come off. The other important thing that you need to know about PMI associated with conventional loans is there are pricing tranches. So the mortgage insurance on a 95% loan to value is significantly more than the mortgage insurance on an 85% or less loan to value home. These are important differences, okay? So let's jump into that. Why is this important? Why do I care? If you are a buyer, first and foremost, understand not all mortgage insurance is the same. Not even mortgage insurance isn't even the same on a conventional loan. This is important because if you're a buyer and you're working with your real estate agent, you may want to look at conventional loans where your down payment is such that it's 75% loan to value. There's no mortgage insurance here. On the other hand, that real estate agent may come to you and say, you know what? You can get this loan without mortgage insurance because your down payment, your financial condition. But the purchase of this other home that may have 83% loan to value and an associated private mortgage insurance payment could actually be a better home for your needs, expanding family, retirement, whatever your financial needs are and your needs of a home. You may be in a spot in which it's better to pay private mortgage insurance at 83% loan to value or 87% loan to value than the home without it. And those are decisions that you have to make as the buyer of the home. So important things here. First and foremost, just understand not all mortgage insurances are different and are the same, I should say. If you understand the nuances of mortgage insurance, you will be a better buyer and you're going to make a better purchasing decision. Next thing, you got to work with a real estate agent because the real estate agent, one of their primary jobs is to show you the associated value of homes across different price points and different mortgage products. And so, you could be in a scenario where an FHA loan is the best loan for you because that's how you're going to get into home ownership. Or you could be in a scenario in which different homes at different price points, different communities, different neighborhoods, that home fits your needs better. And the mortgage insurance between 84% and say 87%, it could be significant. And you need to know that, and that real estate agent can help you with that. All right, lastly, my comment section here in the YouTube post has a link to an article that was provided, I think, last August by Mortgage Reports. It's a great article, goes into it in a little more depth. I hope this information helps you. I love to continue the dialogue. Please feel free to call me at any time to ask more questions, understand how mortgage insurance can make you a better buyer, and certainly a buyer that is looking at the home that is just right for your financial and your also physical needs of the home. Thanks again for taking time and checking out my content. I always appreciate it, and I hope to chat with you soon.